Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Sumitomo Chemicals. Is it a multi-bagger from here or will it just consolidate going forward? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Sumitomo Chemicals, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from now and then. And also, I'm adding new features to the Patreon site, so kindly join there and enjoy all the benefits with $10. Now about the company, Sumitomo Chemicals was established in 1925 and they produce agri-chemicals like fungicides and pesticides, have multiple production units across the globe and in India, has got multiple awards on many fronts from the Indian government and on global front as well. They also manufacture specialty chemicals apart from agrochemical products. The market cap of the company is around 14,000 crores. If you look at the financials of the company, then the sales were up by around 4 to 5%, whereas the profit growth was pretty exceptional at around 50%. It's a completely debt-free company, high promoter and institutional holding with only 10% free float in the company. Return on equity is pretty reasonable, in fact, very good at around 22%. Operating profit margin is around 14%. If you look at the company performance, that it has been a market leader in this space and has performed really well over the last couple of years. The company has been giving very good results over the last 6 to 8 quarters. China emission bans was a big positive for the company. So from 2015-16 onwards, the company started doing better on the stock front, and over the last 4.5 years has done exceptionally well. 5 year profit growth has been a whopping 40% CAGR, and that's why the surge in the stock that we are seeing. It has a good dividend payout ratio as well, and a very good history of paying dividends. Very healthy sales growth over the last 3 years it has remained, and so the margins have been pretty good, and so the profitability has also been over 35-40%. Might remain in an upswing for the next few weeks, that it seems like, because the numbers have been so robust over the past many quarters. What to do? Well, in my opinion, it can be bought on declines, so you have to be vigilant about these companies. I want to take some time and discuss about this. So what has happened in the chemical sector up till now is that the stocks have run up everywhere, so left, right, and center. Most of the companies uh, in the chemical sector, whether it is into agrochemicals, agri theme, whether it's into specialty chemical, whether it's into dyes, pigments, or surfactants companies, or other types of manufacturers which are mixed of, say, pharmaceuticals and other forms. These companies have performed really well, and we have seen that they have scaled new highs. So many of these companies which used to trade between 12 to 16 times, 12 to 15 times earnings on an average before 2017-18, are now trading between 22 to 25 times, some of them over 30 times earnings. Yes, agreed, the numbers are pretty good. Yes, agreed that they are growing at 35-40%, but these you can say these numbers are not, in my opinion, consistent, will remain consistent over the next 5, 6, 8 years. So over the next couple of years, I feel, yes, the numbers may continue to show the same amount of vigor and fathom. But when you consider buying the stock for a 4 to 6 year, a 7 year time frame, I would avoid chemical companies. But yes, next couple of years could be very good. But again, at these levels, even from a 1 to 2 year perspective, the stock looks very much, you can say, very much overvalued. So in my regard, any bad days in the market, when the market falls 100, 200, 300 points, stock falls 3 to 5%, you can accumulate on each decline, but don't overstay your welcome in these stocks. Probably the next 2 years, 1.5 years could be very good, but look at sectors which are being ignored at the moment, which are related to consumers or consumer ancillary, and they would continue to perform well, rather than looking at the in sectors of today like pharmaceuticals, chemicals, and you can say IT. Even IT has run up a lot, so this run could continue for a few weeks. But if you are planning to invest and forget kind of a thing, or planning to invest for 2 to 3 years, then these stocks might be at a cusp of a decline going forward, rather than at a cusp of a breakout. So that you have to take into consideration, because we as retail investors do not know as to when the stock is going to peak out, or what is the top of the stock. We have to keep analyzing the valuations and then discuss valuations. In my opinion, in this stock looks extremely rich, and it is becoming richer, and I have no doubt that the stock will continue to go higher, but I don't know for how long. So declines could be bought into. Have a 2 years perspective, be vigilant in analyzing the numbers. Have, well, 5 plus year time frame. If you have, then have a target in mind. So if you are looking for a 16-17% return over 5 years, that's a doubler. So if the stock doubles over the next 2 years, you exit. If the stock doubles over 1 year, you exit. If the stock doubles over 3 to 4 years, you exit. So that is the kind of assessment you need to do. It is one of the better chemical companies, there's no doubt about it. So there are companies that have run up without fundamentals. There are companies that have run up, the mid and especially the small and micro cap companies, which might not have run up in a very, in a environment where liquidity would have been less, but they have. So you have to be very careful buying into chemical companies which are much better off, rather than you can say buying into such companies as being mentioned here. So in my opinion, what you need to do here is probably buy on any kind of major decline. It has run up a lot, and then look at numbers, analyze number, and then take a call. If the numbers start telling a different story, if the numbers start getting you can say, if the returns are, or the, you can say, the profit growth start declining, the stock might be derated very quickly. So be careful about it. I won't say that it cannot be a multi-bagger. I would not say that it can be a multi-bagger. I feel that the stock is richly valued at the moment. Yes, the company is good, everything is nice. If you buy today, have a fairly long term time horizon, and be ready for major sort of declines in the stock, and put only 5% of your complete holding in this stock, rather than putting in more money into such small and mid cap companies. So this was my video on Sumitomo Chemicals. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.